What's up, YouTube? Jake Merwin here. Another YouTube video. Now in this one, I want to talk about and share my experience of six simple stocks that I think that everyone should own, and they could help make you lots of money in the next decade. So the first stock we're gonna start with is the stock called Broadcom. Ticker symbol is AVGO. So this is why it's at the top of the list in my opinion. Now over the last 5 years, it's been up close to 700% in the last 5 years, and their dividend it's only 1%. But the thing that you guys can go on Google, well, I'll show you for the first one here. So the dividend yield was only 1%, but if you look up the DGR, which is the dividend growth rate, over the last 10 years, it's been up like 30% on like an annual basis. Well, it's not gonna load, but yeah, just go to this website, Digrin or whatever, and then it'll show you look up the ticker symbol with the DGR. That's the dividend growth rate, and then you can also look up the dividend history, and it'll show you all the information about the dividend. But yeah, so basically the reason why it's at the top of the list for me is because the dividend growth rate is like a 30% increase on an annual basis. So think about it this way, like your shares, your dividends are gonna be getting a 30% annual raise over 10 years basically. So that's like 400% or something. So if you buy the stock today, you're only getting 1% on that, but then in 10 years from now, you're going to be getting like 17% on your cost basis. So that's something that you should look out for. It's not only about a high dividend. You look up, because I'll show you one right here. Well, I'll just do it in order here. So there's Broadcom. Now the next one is going to be Microsoft. Same thing with Microsoft. So their dividend yield is like, it's not even 1% right now. It's I think it's like 0.8 or 0.7, right? So 0.7%. And it all depends. The dividend rate, basically, it all depends on where you buy it. If you buy it up here for 450, or if you pay 460 for Microsoft, then like hypothetically the dividend yield is only going to be around like 0.6%. But then if you buy it for under $400, then you're going to be getting like a 1% yield or something. So but I don't know the exact number. I'll try to look it up here and see if it loads. But Microsoft, they have a high dividend growth rate as well. Oh, it's not, I don't know, something's going on with this website. So, where is it? Oh, it's not that high actually. So if you go to 10 years, and then that kind of gives you a better average. So in 2014, they were paying what's that annual pay? growth, annual payout growth. I don't understand that. So basically just dividend growth rate for 10 years, it's basically only 10%. Well, yeah, so it's not that much. I thought it was more, actually. But anyway, though, like if you're getting a 10% raise on your dividends either way, like that's pretty good. And like the other reason I like Microsoft is because um I like Microsoft because like they got Xbox and they bought Blizzard. They're in the gaming, like they're heavy in the gaming industry, and they're also trying to like make nuclear reactors. But this is why I like Microsoft. So basically, you look at like the last 5 years, it's not that great, 155%. But then you go to max, it's like 426,000%. So if you would have bought it in 2011, it like you're gonna like 20x your income in 10 years or 15 years or so, right? So that's pretty good. You hold this stock for 20 years and you're also getting a 10% annual raise on your dividends, right? So I wanted to, and then we'll go back and we'll look at the other ones that I chose. So the other one is Google. Now Google just started paying a dividend, and I think it's around 0.5% or something like that. But I have a feeling that they're gonna have like a high dividend raise. Yeah, see, like when I bought it, it was 0.5% because I paid 169 for it. So it all depends on what price you purchase it at, how long ago you bought it too, because then you're gonna get a dividend raise, right? But the main reason I like Google is because they have YouTube. YouTube is pretty much is like everybody knows how big and important YouTube is. Like for example, YouTube is worth over 400 billion, right? And then you go to something like Netflix, there's like not even they're like 354. But when I first started investing in Google, YouTube's valuation was like over double of what Netflix's valuation was. But here's another stock like Netflix. Netflix is all right in my opinion. It's not like it's something that you can invest in on the side and like $5 a day or whatever, a dollar a day, and you'll make some money. But that's not really one that was on my list here. So another one is AMD. I like AMD. Uh, basically, they're a competitor with Nvidia, and like I own both of them. I own Nvidia and AMD, but the reason why I'm putting Nvidia or AMD on the list here, rather than Nvidia, is because like my Nvidia shares are up like 40%, and I bought them like a year ago, less than a year ago. But and then my AMD shares are down like 15%. So if you think about it, you're getting a 15% discount on AMD because they're trading below the market value. And yeah, I've read some good Motley Fool articles on AMD, basically about like how they've been underperforming. But it's nothing to do with their business or their revenue. Um, then the next one is a Canadian company. It's Royal Bank of Canada. I like this one just because they have a good dividend growth rate as well. The the starting yield is around 3 to 4%. Wherever you depends on where you purchase it at. And I think their growth rate is pretty high too. It's like 10%, I think. Yeah, so then you go down past 10 years. Does it show the percentage or no? But here's just an idea. So you buy these shares today, and you're getting a 3.5% yield, and then you hold them for 10 years. Your yield on cost is actually going to be like over 7%. I want to see like a percentage though of what their growth rate actually is though. Does it show it here? So see, dividend growth rate over 20 years is almost 10%. So that's close to Microsoft. 10 years it's 7.5%. So yeah, 7 to 10%. Their dividend growth rate is for like per year on an annual basis. And then another one is the big oil company in Canada, Enbridge. Now what I like about Enbridge actually is that there's this company called Middlefield. I'm pretty sure that's what it's called, right? Middlefield. And instead of buying like Enbridge directly, you can buy this. It's basically like an ETF, right? It's just a company called Middlefield, and they basically just manage this ETF, which is called ENS, E-Split Corp. But the only thing they invest in is Enbridge. And let me find their dividend here. So they're paying over 10% of a dividend yield, but at the same time you can see here like there's no dividend increases. You go back to 2020. Look, see 2020. You go back 5 years and they're still paying the same dividend. It's that they haven't had any increases, and the stock price hasn't really gone up that much. So this is actually my biggest position out of anything. Like is in this fund, and I'm getting like close to $200 a month of a dividend just from this company. But in my opinion, if you buy into the actual company themselves, it's way better. So that's why I didn't put this one on the list. I put Enbridge instead, because over time I'm gonna change my investing strategy and sell out of the ENS, and then I'm gonna buy more individual stocks. Just because because like the number one reason is that you're actually, instead of owning an asset management company or whatever it is, you're actually going to be owning the company of Enbridge. So it's better to buy this individual stock, and like it's safer that way, and your dividends are you're gonna have like dividend increases. So about those dividend increases with Enbridge, you can go on Google and find this out. Enbridge DGR. Let's see what it is. So So the growth rate for the last 20 years, it's around 10%. So yeah, it's around the same as like Royal Bank. But then if you look up uh the dividend history. So they've been paying dividends for over 69 years, and they're considered a dividend aristocrat because they've increased the dividend as well, like every year for. Here, I'll just Google it. So, come on. How many years? How many years has Enbridge increased the dividend? So for over 29 years, they've increased the dividend of a growth rate of around 10%. So they've been paying dividends for almost 70 years. And for 29 of those years, um, increased it. They've increased it. So, um, I don't know exactly like what they're paying right now because I don't really buy that many Enbridge shares. I like I was saying, I buy the ENS split corp, and then I get my dividend. The dividend is higher. The dividend is like double, and I get my dividend every month, rather than every quarter. And then but at the same time, like, um you're not gonna get like 30% of a capital gain from ENS, where with Enbridge you'll get a higher capital gain, and over time it'll be better because then you're gonna get those dividend increases. Well, I just want to see the percentage, the percentage on the shares. Just look up ENB basically, and then it should show you right here. So 6%. Yeah, it's tough. Like at first, I wanted to make the video about 15 of the best, or I don't know, 15 stocks that every investor should know about, and then you're basically gonna like 15 of the best stocks for your portfolio, and then you're not gonna need like an ETF or something by a Vanguard or BlackRock or an index fund. You're basically gonna have your own ETF in your portfolio by choosing the best individual stocks. But like this video is already 15 minutes long, and I I barely even touched the surface onto like the company. Like I didn't even tell you guys about like how Avgo makes their business, and so that's why I only chose six of them because yeah, like uh it's I don't know, it's just easier that way. Like it's a lot to talk about 15 of the best stocks and then to break them down as well. But in my opinion, I'm not saying like only buy these and nothing else, because like you're gonna want to buy other ones. You're gonna want to buy like real estate investment trusts and healthcare companies. So I think I'll end the video there. I might make another video about like the other six that I didn't get to include. Um, well, really, there's like 9 or 12 more that, like, in my opinion, every investor, if they're buying individual stocks, they should own over 12 companies, or like probably close to 20. and then it just gives you that diversification. Um, but yeah, I'm gonna end the video there. So let me know what you guys think, and like what else you want to see. I have a hard time explaining it and getting it out, but I do have good knowledge that people can learn from. So I hope you enjoy the rest of your day, and